Mortgage rates and home values, mortgage rates and home values. So that's the big question we keep getting here at the Ed Huck team. My name's Ed Huck with Keller Williams Realty, and we're going to talk about mortgage rates, what's going on with them, and how it's affecting home values. So this is your 2024 November market update. Mortgage rates have gone up. They've gone up almost 0.5% since we did our last update in the middle of October. So rates were about 6.35 the middle of October. Now they're about 6.78 for a 30-year fix. So again, that's almost 0.5%. The question we keep getting asked over and over is, if the Federal Reserve keeps reducing their prime rate, why are mortgage rates continuing to go up? Well, we're going to dive into that a little bit. And the short answer is because they're not directly related. What ends up happening is mortgage rates and the 10-year bond rates tend to go up and down together. So you can see on this chart here, we've got the 30-year fixed mortgage rate and the 10-year treasury yield on the 10-year bond rate. And you can see that these lines, the green line and the blue line, almost are identical the way they go up and down together. The red line on here is actually what the Federal Reserve fund rate is what you hear the Federal Reserve raising and lowering interest rates. And you can see that there's a little bit of correlation, but not a lot. So what typically starts to happen is the bond market and the mortgage market mirror each other, and they actually kind of guess a little bit ahead of what the Federal Reserve is going to do. So you can see here just quickly, in say 2020, maybe beginning of 2021, they assumed that the Federal Reserve would start lowering interest rates. And then what ended up happening is the bond rate and the mortgage rate went down. You can see over here when we start to get into, say 2023, when the rates started to go up, this is the Fed rate, the mortgage rates and the bond rate have already gone up. Now, the interesting thing that's happening now, and the reason the bond rates and mortgage rates kind of go up and down together is they are competing for the same investors to buy these. So your mortgage typically is, you go to a bank or a mortgage company to go get your mortgage, but that mortgage is actually sold to investors that buy these mortgages. So those investors are also looking at the 10-year treasury yield and deciding which one they're going to buy. So that's why they kind of go up and down together. So it's not tied to the Federal Reserve rate. It's tied more towards the bond rate. So how's that affecting the real estate market? So the number of new listings is pretty much flat. So if you look at this year to date versus last year to date, we're around 18,700. And then the number of for sales, so that means the number of available listings to go look at today versus last year is actually up about 7%, which is good news. You would think, actually it's good news for buyers. Let's put it that way. There's a little bit more inventory to go look at now. Number of homes pending. So that means the number of homes that went under contract, and then the number of homes that have transferred is actually down a little bit year to date. So the number of homes that have actually transferred is down about 3%. Again, take that back. The number of homes under contract is down about 3%. The number of sold is down only about 2%. So again, there's a little fewer homes that have transferred this year. I wanted to see how rates, so what's the interest rates, because they've gone up almost 0.5% in the last 30 days. What's that doing to today's market this month to date? So you can see here on this chart, if we look at the second part of this chart, so the right-hand side of this, it talks about the current part of this month versus the current part of last year this month. Does that make sense? So basically the first 14 days of this November versus the first 14 days of last November, the number of sold is down actually 14%, which is a little worrisome. But then when you look at this, the number of pendings is actually up almost 14%. So I'm not quite sure exactly what's happening there. We'll see later in the month. I think those will kind of cancel each other out. So we should probably have about the same amount of pendings and transfers for this November as last November. And then when you look at this month versus last month, our pendings is only down 1.1%. So right now, that little click in interest rates going up 0.5% is really not affected much. So average sale prices continue to be up. They've leveled off for the past 4 or 5 months, 6 months maybe. We're starting to see this around 6% year over year appreciation. So when we look at the average sold price this year to date versus the last year to date, and then I love looking at the rolling 12 months, which gives us a little bit more data. It's actually up about 5.7%. So average days on market, homes are still selling really quickly. So it says here they're selling a 1 day slower this year to date than last year to date, which I would say is a flat, even though it's up 2.6%. It's only like 1 extra day. So what are the big takeaways? The 30-year rates are up about 0.5%, but homes are still appreciating at almost 6%. The number of available homes is up a tiny bit. And what we're still seeing, even this last 2 or 3 weekends, is if you have a great house and it's really updated and it's priced competitively, it will probably sell in multiple offers within a few days. So if you have, obviously these stats are kind of not generic. They're geographically to Lorain, Cuyahoga, and Medina counties. Each neighborhood's really specific though. So there's some neighborhoods that might be a little hotter and other neighborhoods and price ranges might be a little bit colder. For specific data like this, please reach out to us. Love to help you out and make it a great weekend. Thanks.